Hello everyone. June has been a very good month from the Reserve Bank of India's foreign exchange reserve accretion angle. It's a month we can rejoice about because there has been an accumulation of half a trillion foreign exchange reserves. And that's good news for not just central bankers or bankers or for foreign exchange dealers, but for the economy as a whole because it restores the confidence. It indicates a restoration of confidence in the system. And therefore, we should welcome this month. It's been walk, a long walk to $505.6 billion worth of foreign exchange reserves, which is computed in terms of foreign exchange currency, holdings, gold, special drawing rights of the International Monetary Fund, and reserves with the International Monetary Fund. These are the components of foreign exchange reserves of India. It's been a long march and a painful march. In 1991, it started when we had just about $5.8 billion. That was just under 15 days of import cover. To half a trillion dollars today is 1 year import cover, and that is commendable. One moot point is, has the rupee kept pace? When the system becomes so confidence generating, the rupee should strengthen. I did an analysis of 28 years beginning 1993 to 2020, took each year's foreign exchange reserves and rupee positions and saw that the rupee has taken an inverse route. As the foreign exchange accretion has gone up continuously, the rupee has depreciated continuously. There has been a negative correlation of 0.8. 31.37 was the rupee in 1993. It went to 45.32 against a dollar, against $1, 45 rupees 32 paisa in 2008, and today it is at 75 rupees 95 paisa. So any foreign exchange reserve aggrandizement, steep increase has been followed by a steep fall in the value of the rupee. Almost. Why so? First of all, let us understand that the Reserve Bank of India has no target or band for the level of the exchange rate. That is well understood. The Reserve Bank of India has been buying dollars in order to improve the credit rating of India, as also to keep a buffer for a possible volatility in the foreign exchange market. It has built buffer. So in the post-pandemic months, we are told that press reports are that up to $9 billion may have been bought by India, by the central bank, Reserve Bank of India, because it wants to improve the credit rating. Contraction post-pandemic in the economy has brought about adverse remarks by credit rating agencies. We have slipped into negative territory. To stop such a halt, to halt this fall, Reserve Bank has been buying. Exporters may, seeing that their rupee is sliding, exporters may be holding back. Importers may be coming and creating more demand for foreign exchange so that the rupee falls further. Foreign portfolio investors are hit and run traders. They are investors in the shortest term. and they are hot money. They fly to quality at every opportunity, make their profits, and exit the markets. Then the rupee goes down. Foreign direct investment, like what came to Geo or to Airtel, are good investments that we should attract. But that depends a lot on our productivity too. One other reason could be that there are unhedged foreign currency exposures with the corporates, which result in market sensing that there could be future falls in the rupee. Finally, one issue which we should raise is that there have been possibly intraday limit manipulation, or I wouldn't say manipulation, they could be building speculative positions. The bank traders could be building speculative positions because they see that the trend for the rupee is to slide down. So they take a directional bet against the rupee. All these could be factors. If the rupee falls, there is an inflationary potential that it brings, and the Reserve Bank must be on guard against it. Any fall in the rupee could forestall the importers because the imports become expensive. That should help self-reliant Atmanirbhar India and Make in India conceptualizations more. Finally, one point is that the reserves of China are huge. As we see that country as a competitor, we should know their strengths and weaknesses. Their foreign exchange reserves aggregate $3.4 trillion. If we compute Hong Kong, which is technically a part of China, Hong Kong has $471 billion. Together, China has $3.9 trillion. A trillion has 12 zeros after it. So China could, if it starts manipulating its foreign exchange reserves, shake the world a bit. China has 7.5 times more foreign exchange reserves than India. So we need to be on the guard. While we are joyous at the accretion of foreign exchange reserves, we should also be thinking in terms of whether we can enhance our productivity in the long run and in the short run. Because that economy which is more productive is the economy to which foreign direct investment will flow, and then there will be more accretion and more strengthening of the currency. We should also think in terms of how could we gainfully utilize the foreign exchange reserve stocks which we have. Because the Reserve Bank has to balance between safety, liquidity, and profitability. But it also has to reckon with whether we can gainfully utilize. Like there have been suggestions whether we could use a portion of the foreign exchange reserve to create much needed infrastructure funding. These should be elaborately deliberated on. Thank you so much.